wonderful New Year. So, okay,
Good. I'm glad to hear it.
unusually good New Year. All right.
Unusually good New Year.
Yes,
All right.
yeah, because a lot of progress I think happens on the family front. So I guess
Uh-huh.
yeah, maybe that's a win. Um, a lot more acceptance, discussion, communication, and also positive focus. Okay.
All right.
So yeah, so that's I
On
actually
what? On
compliment.
what particularly? Just general
Oh,
stuff, or in
uh,
particular to the project?
I think well, it's you know, I think our yeah, I think it's about there has maybe a tradition of falling into the gap in some of the family discussions. But this year I've been quite intentionally to do more positive focus and clarifying the gap and the gain, and also try to
Uh-huh.
share that with family members, and also maintain a focus on the positive side of things. Yeah, so I think that's a win.
Well, I'll see what I can do to help bring you back to this gap.
All right.
I just want to see if I can pour water on your fire.
Okay, okay. All
No,
right.
I'm teasing. Of course, I don't want to do
All right.
that.
So yeah, so that's I guess a win. Yeah, actually accompanied my mom to the to see his brother, my uncle yesterday, and
Mhm.
we had some discussion about what to do with some family properties. Okay, so I think again something to moving forward. Yeah, which is
Mm-mm.
again properties that hasn't been really been touched on, cared for years, and now finally.
How many properties have you got then as a
It's
family?
not mine. It's not mine. It's on my mother's side. Uh, for our own family, you mean I mean if
Well,
my
just generally speaking, because you talk about your mum, your dad, your brothers. I mean, your uncles.
right. Okay, so I think collectively well, I guess our family, my immediate family, probably there's like four, five properties. Yeah.
Uh-huh.
Yeah, I
Okay.
think that's one number. So obviously
Okay.
more on the relatives. So
Mm,
Taiwanese
mm,
like to
mm.
accumulate properties. This is one of the main investment vehicles. All right, so I guess any wins you'd like to share on your end? Just one quick win.
Um, yeah, I'm just moving forward. Everything's good.
Okay, okay. All right, okay.
Yeah.
So again, maintain a positive focus, I guess. It's
Always, always.
okay. Yeah.
They can't be
One
negative.
one thing I think that has been yeah. Okay, so I learned of a program called something about marriage. Okay, that's another win. Yeah. It talks about how don't like go into fights arguing about the differences, but simply, focus on the positive experience, creating the positive experience. Yeah. So I think that's
Right.
yeah, especially in marriage. So I think that's another thing I'm learning. All right.
Yeah.
All right. So let's jump into it as you suggest last time. Okay.
Sure.
So
Yeah.
let me
Cool.
share my screen. I don't know if you've done your homework. I have. Okay. So I don't know.
Honestly, Shinyan, suggesting that I have not done my homework. Well, let me share my screen then.
Okay. So you have something to share? If so, then
Yes.
maybe yeah, that do yours first then. Okay, because I
All
think
right.
it's
Let's see
about
what we've
my
got
last time.
to
Yeah.
look at.
All right. Good.
Probably let's try this one here.
All
Okay.
right.
So first of all, started off with an impact filter.
Okay. Sure.
Um, right. So we've got. Actually, you can see. Can you see? Has it changed? Your screen is
Mm,
sharing as pause. No. Okay. Fine.
okay.
Right. Fine. So I
Right.
did do two. Can you actually see that tab? Can you see there's a second
Yeah.
tab there?
Okay. All right.
Can you see
The
that?
yes, advanced property program impact filter. Is that what you're saying?
Right. So
Against properties,
using the logic and the systems of Coach,
right.
then I did this impact filter,
Okay.
the advanced property program, right?
Right.
And that, sorry, I didn't mean to change. So that spells
Mhm.
TAPP or TAP.
Right. Tap. Okay.
So that I think is the basis of what I thought we could do. But anyway, I did that ages ago, and I sent that to you ages ago.
Right.
I haven't sent you this one because I did this this morning.
Okay. All right.
So just what did I'm just doing the general kind of thing. I'll send you this so you can read it. I won't spend time reading it all. But I just wanted to kind of get some clarity onto what is it we're trying to achieve. And fundamentally, it's how to do the kind of the offer or the element of the tokenomics for two different things. One, and this is the first one, is the platform, and then the other one would be actually investing in projects.
Right.
So you've got the two different elements there. So so if I went from there, I'll go to another screen then. So that kind of gave me where's the screen sharing? Share screen. Okay. So that made me go from there to another one, which is this page. And I kind of meant, okay, so we've got two different things here, right?
All right.
So if we call tap, right, this bit here, I would color coordinate this if I had time, so it'd make it easier to read. But if you look at this big egg-shaped thing in the middle here,
right,
and that's tap. So what is tap made of? It's made of founders, advisors, collaborators, and staff.
Okay.
And what does it do? It answers two different kind of scenarios. One, it's got investors on one side, and it's got developers on another.
Okay.
Okay. And so the requirement to tap needs to be able to fulfill these regulatory frameworks, legal, surveying, valuation, and so on and so forth for doing due diligence, so that investors can feel safe with what's going on. And then also it needs to consider that what all a developer or a landlord wants to do, they want to finance projects.
Right.
So we're helping them finance projects to fundamentally either buy land or buy property, and then to help with the construction.
Okay.
So, but for them to get money from TAP, which comes from the investors, then there's a bunch of other stuff that we need to make sure that there's been considered. Risk and mitigation, the design, the architecture, the planning. Is there a sustainability or impact element to the project?
Okay.
And then what are the exit strategies? Okay. So that kind of builds, some elements to build. That helps us understand what is it we need to do to make TAP a success, because then you're going to have two different types of investors, which is what I've kind of identified in the collaborators bit, and I'll show you that in a minute. So, but your investors are going to be, your primary investors are going to be investors in TAP, the platform, and then you're going to have secondary investors who are going to be using TAP to finance projects. And as a tagline there, you could actually start thinking about things like how to tap into property. Bit cheesy, but it kind of works. Right? So that gave me a diagram to work from, right? Or how to tap into investing in property, right? Or how to tap into tokenized property, right? And then we're using the brand name to tell us that, right?
Right.
Okay. So next one then is, let me just find the page that we're on. Okay, fine, there we go. Okay, good. Now I'll go back here and I'll share this screen.
That gives TAP a nice sounding.
Yes.
Okay.
All about what it sounds like. Okay, so this is the document that I think you're really more interested in. And again, I haven't kind of done headlines and stuff because I worked on it this morning. So this was a considerable amount of my frog time spent doing this. So this is creation of a platform, right? So that's that. So what's the platform? Platform tokenizing real estate or property development. It's about releasing funds within assets, generating funds, okay, so people can do development. Why is it a good idea? So, and these are the kind of the benefits for everybody here, okay? So we're doing multiple things. Enables investors, so and this is the key point there as well, is it's regardless of size or experience, right? You can participate in funding projects. So typically, people will get funding from high street lenders like banks or pension funds or kind of, you know, big organizations. So the little guy doesn't really get any access to that. So it enables that kind of almost crowdsourcing type funding to happen. And it's all about having asset-based returns. So you're building a level of security within that. Globally operational, so that's great because then you can take advantage of different opportunities around the world, buying patterns, trends, and so on and so forth. Development, so if you're basically, if you're a developer or a landlord, you're always looking for funds. So that's really important. I think we have to make sure that we can do this at a more favorable funding term. Now, a term isn't just necessarily a rate or a time scale. It's got to be something, you know, it's just part of the elements. So it might be that we find a project and we'll have to be flexible with the terms, and we'll go, well, actually, because this project is really risky and you haven't really thought it through, you can borrow money, but it's at 50%. As opposed to somebody saying, well, we've got everything sorted out here. We've taken care of all of the mitigation. Right, okay, you can borrow a more favorable rate of 5%, for instance. But, you know, it's not just that, there's a bunch of other things. But I think we've got to, broadly speaking, think about it from the point of view of, if we can make the terms more favorable, then the people who want to borrow money will be happy to do so. But at the same token, we've got to do it so that the people who are lending the money have mitigated their risk. And I think part of that is making sure that we secure that the asset, right, is part of the collateral of any deal. So basically, if the deal all goes south and it all goes horribly wrong, then the underlying property will belong to TAP.
Okay.
And
okay. To TAP or to TAP or to the investors?
Well, no, it belonged to TAP, but by definition, but then the investors will have a component share of that relative to how much they've invested. So the tokenization or the NFT will indicate that for project number one, you know, 10 investors have 100% of project number one. Project number two, a different 10 investors will have 100%.
Right? Okay, right, okay.
And but understanding how we're going to do that, that's part of the tokenomics, right? Sure, and that's part of the importance of understanding how to structure each deal. Right. So what is the demand? And this is really kind of, I think we need to do a lot better work on this, because I can see there's plenty of different stats and graphs and all the rest of it around the world that tells you all about this sort of stuff. And I think that, you know, if we've got kind of anecdotal, circumstantial evidence from our own existence that says, yeah, it's a good idea, better to have a stronger macroeconomic and geopolitical understanding as to what's going on. But broadly speaking, we can tell that from standard figures, there's currently around about $640 trillion in total in terms of global property, and of that, 520 trillion is residential, and it's kind of supposedly going to grow at 3.4% per year. So they're estimating that will have grown to 720 by 28. I haven't actually calculated what 3.4% growth is I can't remember if that's of 520 or 640. Seems a bit low if it's 640, but anyway.
So this is something you have actual data. Is it?
Yeah,
reference?
it's on a browser. I did a Google this morning.
Okay.
But of course, we're using that as kind of being this is what it's kind of kind of what it's worth.
Right.
But we'll have to be very caveated with what we want. So what does that mean then in terms of growth expectations? Because why would anybody want to invest in TAP as the business?
Right.
And so if we're having, and this, I was just kind of doing some really rough numbers before I had something to eat. If we look at funding 550 million, and if we say that the average growth is 3.54%, then the total growth in a year is 187 million. And if we're going to take 10% of that, then that's 18.7 million, right? That is the fees that TAP as the business will generate in 1 year.
Okay, I see.
Now that is if we take 10% of that fees. But
so you're talking about
reasonable?
$500 million worth of properties being under TAP.
Well, I would say we would fund. Yeah. So it kind of like I don't know. I mean, this is where we need to work the numbers out, and this is what is, and we need to start thinking. I believe this way of thinking helps shape what we're prepared to offer, both in terms of the people who want to invest money and the people who want to borrow money, because there's going to be a little bit of balancing between those two parties, and it's about finding a favorable balance where everybody wins and we're all getting value, right? And until we start kind of putting numbers down, how do we know? And the reason I came to 550 is because what I did first is I thought about the phases in terms of funding. And I kind of figured, well, phase one, I've written this down here, but anyway, I'll just, so phase 1 to 5, right? Phase one, this bit is just us building the platform, right? That's all we're going to do. We're going to make it work. Then this phase here, phase 2, that's us actually going out and funding a couple of projects. And we've proven that it works. So in this one, we're going to do some more development of the portal, maybe make it compliant in different countries, perhaps the US and the UK, Europe, whatever. And we have to spend a lot of money on compliance, but we'll have funding to do so. So in phases 1 and 3, we're looking at people investing in TAP, the business.
Right.
Phases 2, 4, and 5 are projects that TAP will tokenize. So there's 2 different types of investor.
Right.
And now this will
to the platform and to the development projects, right?
Yeah.
Real estate projects.
So what's the ROI? Okay, so I can't, and this is where I also thought we needed to change our language slightly, because your concept of having builders, developers, investors, they're all that's all language, which is very confusing when you put it into a property environment, because
the context,
because you've got the same people and the same names, same words for the actions
well
defined, people do.
It's well defined in this.
So I was going to suggest, and I really don't care if we use them or not, but I just wanted to differentiate. As far as TAP is concerned, it's got founders. Right. So at the moment, that's you and I. And I've put there 66%. And again, these numbers and definitions, we can all change them around, but it's just the idea, right? So something that Ian told us about was advisors. So who are the advisors? Well, we've got key influencers, we've got experts, we've got regulatory, marketing, compliance, industry specific, all this kind of stuff, right? And indeed, if we're operating out of Taiwan, then we'll have one set of guys who are knowledgeable. Well, if we go then to America or the UK, we'll probably need to bring on more advisors, right?
Exactly. Right.
So Ian kind of sat there and said, well, put 50,000 tokens in there, right? Well, so I've used that as a baseline, but I have no idea whether or not that's going to be right or wrong, because fundamentally, what is one token worth? And if we understand that one token is worth $10, then maybe we only want to put 500 tokens.
Okay.
Right?
He was suggesting $50K, actually, I believe. 50K US dollar worth of tokens as the
worth of tokens.
Yeah, but it's
Okay,
dollar. The 50K is dollar value. Yeah, it's in US dollar.
Right. So then okay, fine, whatever. Then then for the purpose of this exercise, let's assume then that one token is worth $1.
Right. Sure.
Okay, so this one here, C, as an advisor, this is where we can start actually building in some structure, which is more understandable from an investor's point of view, because basically you've always got your founders, then you've got your board of directors. You need to take that.
There's I think there's a call. Right. You've heard it?
Yeah. Okay. You can take the call if you want.
Let me just quickly respond. Okay.
Sure.
Okay. Oh, okay. All right. Let's continue. Can you hear me?
Yeah. Okay, cool. So what this does then is, if we have it so that people can actually, we have to get it so that when we're getting the concept across, it's different enough for it to be disruptive and advancing, but it's not so complicated that people can't understand it.
Right? Okay. Right.
So with this, then you've got the strategic management and operational overview, right, to make TAP successful. That would be kind of like your board of directors.
Okay.
So, and that maybe made up of different advisors who come out of this section here, right?
Okay.
Or it might be completely different people. But the key difference here is that these guys can get a percentage of the kind of an addition, part, what's left over, the 44% basically. Makes sense. So that makes them slightly different in terms of what they're offering to just the standard advisor.
Okay.
Now we're into collaborators. I just deal with staff first. Staff are basically people who want a salary and they don't want anything else.
Right.
For whatever reason, they can't take the risk. Right.
Okay. Right.
Collaborators are people that actually want to invest or be paid for with some form of token.
Right.
So participants in operating TAP platform. Well, if you've got the board of directors here, right, you've got people like senior management that do operational kind of work, or then that might be somebody who writes the code for a particular part of the platform, or it might be somebody who runs a team of code developers, or it might be all the marketing people and the marketing management people, and so on and so forth. Right. It's all those types of people that do jobs that are willing to take tokens, not salary.
Okay.
Now, again, the value of how many tokens are given to them annually and the value of each token, that will be dependent upon how much money TAP actually makes and what the value of TAP actually is. We won't know that until we figure that bit out. So these numbers are can be changed. But it just means that we're thinking about how we're going to designate what we do. Now you've got investors in TAP projects. Now these guys, because the TAP project, let's say the Flourish project is going to be very different to one of Henry's projects, right?
Right. Likely, yes.
And let's say that, you know, Henry's project is going to generate, I'm just making these figures up, right? He's going to need an investment of 2 million and he's going to generate something which is worth 10 million. So there's an 8 million profit and it's going to generate 100,000 a year. Okay.
Okay.
You know, now when Henry comes to TAP and says, right, I want to get funding, how do we tokenize this? Then we're going to have to sit there and go, well, the way it works is, and then we're going to have to figure out how that bit next, right?
Right.
Because we've got to figure it out so that Henry's going to be really excited because he's going to get funding at a better rate than he would do if he went to the bank.
Right.
But he's also got to be prepared to pay for finance.
Right.
And so when we go to the investors and TAP opens its doors and says, TAP announces to the world, hey, we've got a new project. It's this. These are all the criteria. This is what it's going to do. It's going to go from 2 to 10. There's 8 million in profit and it's generating da, 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 da. What type of tokens do you want?
Okay.
That's what a TAP investor, a TAP project investor is going to look at. And the deal will be different every time, assuming that each project is different.
Right.
Make sense?
Right.
These guys, these phase 1 and phase 3 investors, these are the guys who are investing in TAP as the platform, TAP as the business.
Right.
And these guys, we need to give them a percentage of something.
Right.
Because otherwise, why are they going to do it?
Right.
Why am I going to invest in your wacky project if I'm not going to get any return on it? And the return on investment is, well, actually, you're going to get 40 for 1.5 million. You're going to get a share of 14% of the actual value of the company.
Right.
Well, in theory, that that's going to start off. If people give 14% for 1.5%, sorry, 1.5 million, then it's just a bit of mathematics to work out what that number is, right?
Right. Okay.
Per token.
Right.
Next time round, when we've done our funding and we can actually illustrate that TAP has fulfilled its financial targets, let's assume then that TAP is now worth, I know, 5 million.
Right.
I'm just making these numbers up. I don't, we have to work that bit out. Now we need to have some funding to take it to the next level.
Right.
So they're going to get 10% of what, and so fundamentally, all the investors will have a share of around about 24%.
Okay.
But obviously, the secondary investors are going to, the phase 3 investors are going to we'll have to work it out so that they get less of a, they have to pay more money for the same shares or whatever it is.
Because
I can't, you know what I mean.
Took more risk. Yes. Yeah.
They
want to have a less favorable terms. Yeah.
So that's kind of how I was thinking we should try and structure it. I wanted to include and incorporate your concept of doing this kind of 33 and voting shares and all the rest of it. But I wanted to make it so it's simple in terms of language, so we're not confusing.
Right.
B, that we're incorporating some advice from our advisor, and C, that it's kind of understandable from a standard investor's perspective.
Right.
And I think the thing is, all that this is a starting point from which we can ask questions, and from which we can sit there and determine, will it work?
Okay, I see. Okay. All right. So thanks, Mike. I have a question I want to ask while listening, which is what the percentage refer to the profit share, or in terms of the I think it's more like the profit share, right? As opposed to the funding being raised, right?
So this percentage here, these percentages and this percentage,
right, exactly,
and these two here,
exactly,
right, yeah. So that all adds up to 100%, obviously. And that's then, 100% of the value of the company.
Okay. Okay.
Now, if we sat there and said it's 100% of ownership in terms of, owning it, which is what you might do on a publicly traded company or something like that, then again, I think we just need to think this through and what does that mean. But I wanted it to be something which could be equatable to a standard kind of agreement that you would have within the normal marketplace, because that's what these guys are going to do. If the company's, it's like shares for anything, right? Voting shares and non-voting shares and all that kind of stuff. It's just structuring what that means. And I think I wanted to kind of say, well, as founders or initial investors, you're going to have, something to look forward to. Where's the growth? How do you structure it so you're going to grow? Your initial investment is going to grow. Because Chris nearly bit your hand off when you sat there and you said the first set of figures to him, because he was thinking, what was it, 90 grand to have a 30% share of 1.5 million or 15 million or something. Right. I mean, that's a no-brainer for him, right?
Okay.
So it's got to be along that kind of line, moving forward. Whether or not we actually choose this layout or not, I don't know, but that's kind of the direction I wanted to try and take it, if that makes sense.
I see. All right. Okay, so that would be kind of the I guess the kind of the share, right? In terms of in a traditional company, that would be kind of the share percentage, right? And does that correlate to both profit sharing and voting power, or are the two coupled?
Again, we can choose. We can choose whatever we want with that. You see, I think.
Well, what's your current thoughts, though? What's your current thinking, though?
I'm really not. I mean, I've always been of the opinion that profit share is the only thing you should let people have access to, and that voting rights is, it's a very different thing.
Okay.
But
I see.
I know that and what I didn't want to do is I didn't want to come in here and say, blah blah blah, these are my ideas, because and then be strikingly different to yours, because then I'm not listening to what you're saying, right? So I just think that so I put a percentage and was open to the idea of it being voting, because voting was really important to you. Now, if we're talking about this from being a DAO at a future date,
right.
I was thinking about this as well this morning. I wouldn't feel, I don't know, you'd have to have some track record with the organization for it to work as a DAO, I think.
Okay.
And then that whole kind of, well, this part here, right? Who's the board of directors? How do they operate? Because who's going to be making the decisions in a DAO, right?
Right.
And if you open it to everybody who's got a part of it, then again, that's very random. And if you're asking people to fund projects in the millions, do they want to have the potential of their investments not taken over, but influenced by people who aren't necessarily got the same amount of skin in the game?
Right.
So I wanted to illustrate the fact that we can be as flexible as we want, right? Because we're building it up, and we want to kind of have this ideal that, I don't know. I mean, I'm just fairly open about it. So I'm not giving advice.
Good. All right. Okay. So, all right. Okay. All right. So I think I try to capture some of the key concepts that you're all right. So what I heard is that first off, there are some different roles of the founders, the advisors, the strategic management, which is kind of the board and also collaborators and also staff. Basically, collaborators are paid by tokens and staff are paid by cash salary, right? And same as founder advisors. They are, but okay, I think advisors in this case are paid by cash, right? 50K as you suggest. And
No, I was going to pay with tokens.
Tokens,
But
okay.
again, you know, if we're going to say that one token is worth $1, then that's one thing. But if, you know,
Right.
obviously we change the proportion if we think it's different. But we won't know that until we've done the economics of how does the project work.
Okay.
And maybe one way of working that out is if we sat there and worked with a real example. And let's say that we went, well, all right, Flourish, for example, let's do the numbers again on Flourish. And let's work out how it would be funded normally. And then how it could be funded as a tokenized project.
Okay.
And then how much would the Who family be happy with?
All right. So
how much would the Who family be happy with paying TAP, for instance, instead of paying the Bank of Taiwan?
Right.
Or whoever you know what I mean? So the thing is, we've got to work, we've got to, and then then we can work out, well, actually, TAP's going to make, 10% on every deal or 5% on every deal. Well, then that's easy. We then know how much TAP is worth. TAP needs to, if for every 10 million that TAP processes, TAP's going to make 5 or 10%, whatever it is.
Right.
And with that, we then know what we need to make in terms of money, and then we can, do some projections and work from there. But I don't know that you can do it any other way, because otherwise you're just putting percentages out there that are meaningless because you've got no kind of reference point.
Right. True. Yeah. So okay. So okay. I think right now it's okay. Let me feedback a bit, okay, on this, on what the TAP what I've heard so far. Okay, so I like the rules. Okay, I think they are definitely the rules that we will, deal with. I like the idea that we should use words that the industry people can understand, right? And also, I think it's true that both the real estate, but also the crypto, the crypto guys, I think we might also want to, make sure because like advisors, I think it's a quite common role in crypto projects, in blockchain projects, okay, to have advisor as part of the, the sharing. So, and I think, I think actually the fundamentals are more or less, I think the same. There are some basic, I mean, it's really regarding, for example, like profit share voting rights, right? And what's the relative rights of each role? And just allocate a different ratio. Okay. So yeah, all right. So I can see that also the second point of this is it's got different phases interlaced between platform development and also real estate projects development, right? So I think that's also a good design, also a good I think a good idea to have. Okay, so what okay, and definitely you have given some ratios. I think that's good. So there's clear rules. There's phases of interleaf development. And also there are percentage given to different roles. Okay, and definitely there's a big founder share. Okay, I can see that. 66%. Okay, founder share. Okay, and the investor share seems like that adds up to 24%, right? And then there's
Yeah.
the I think a 10% management share, right? So I see that as probably as the expertise, the experts, right? The management that's getting. So okay,
I mean,
yeah.
again, I mean,
Mhm.
those numbers can be changed. It's like,
Right,
you know,
right. Yeah, I
because
understand. Right.
yeah.
Yeah, go ahead. Go ahead.
No, I mean, I think, you know, the thing is, the advisors in the C role, I would say, are kind of like your chief exec, your chief financial, your
Mhm.
you know, all of those kind of board level decision makers that deal with the strategy and the
Mhm.
you know the way forward, and
Mhm.
then then they influence everybody in the collaborators on the and the staff in the B
Mhm.
in the collaborators in the D role and the
Mhm.
staff.
Mhm.
And those are the
Okay.
guys, the collaborators in the D role are the ones who do the work, and the staff are the ones
Mhm.
who do the work. I think for staff, I think it's just part of that 1.5 million, for instance. You know, if you're going to
Mhm.
work with, let's say, you ask a team of Indian developers to roll out the coding for the platform in the first instance. I'm not saying you would, but let's assume that that happens. That's going to be a salary thing. It's not going to be a token thing.
Okay. I see. Okay. So, all right. So I guess okay. So I think one okay. I guess one feedback I have for this is okay. I think for some of the tokens that token, projects, blockchain projects, uh, especially for like, like what Ian has been participating. I mean, the tokenomics usually incorporate, I think, different, shares of tokens that are allocated to, I guess, to different roles. Okay, so this is something. Um, I also, while I was doing my design, my version of design, also I was thinking about how we can incorporate those into part of the picture. So it kind of makes sense to also the token, I guess the crypto people in a sense. Um, yeah, I think that's probably the only thing I have. Um, I'm still, not 100% clear from the current structure. Um, yeah, for example, like advisors, right? Like advisors, I think you put them under the pay tokens, right? They get the pay tokens. So how should I put this? Um, Essentially, they are like getting a salary. Is that correct? I'm trying to understand.
Well, no, I
Or
mean they get given a
a
I mean
fixed
it's
amount
happened
of
to me.
tokens, right? A fixed.
Yeah, I was given 50,000 tokens, right, for the project I worked on.
Okay,
Boom,
okay,
that was it.
okay, okay,
Now,
okay.
it happened that I got given that, and I was then an advisor on the project, and I had a photo and kind of bio and all that kind of crap on there, right?
Right, right,
IncomeSec as a company, because it was doing services for the crypto project, got
right.
paid a certain amount of money for the work that it did.
Right, right,
But Mike Hainsworth got paid 50,000 tokens for being a collaborator.
right. Okay.
Had Mike Hainsworth cashed in those 50,000 tokens, he would have at least had some money out of it,
Right,
um,
right.
because the
Okay,
tokens are valueless now. But anyway,
okay. I see, I see. Okay. So basically,
So I mean, it's a choice that you as an advisor would take. You know, you go,
right,
well,
right.
I'll keep it because I think the project's going to work, and I've got my 50,000 tokens, and in 5 years, that 50,000 tokens will be worth, I don't know, $1 million. Well, I'll wait 5 years,
Okay.
or I'll cash them in now and I'll get $50,000 for it.
Right. Okay. So I guess one thing I'd like to clarify is the 66%, the founders token, for the management at 10%. Okay, so is that also like the same tokens, or that's more like the company share structure? I mean, is that the
Well, I
same type
mean,
of
that's up to
tokens
us.
pay for the
We
advisors
can fit.
or no?
No, no, I don't. I don't. I think we'd have to have two different types of token. We'd have to have like an
Okay,
ownership token and then and then a payment token. But you
okay,
see, the ownership token might be an NFT, whereas the tokens will be traded on the exchange, for instance, and that's where the value of that's where the value of the token will be,
right.
perhaps.
Okay,
Or,
okay.
or maybe it's all closed and we don't kind of list it, or maybe we've got an ownership NFT, a closed funding token, and then we've got a publicly traded token. I don't know.
Mhm. Okay. Right. Okay. Yeah, I guess that's the other thing I wanted to clarify, you know, between like what kind of tokens are we talking about, right? Because I think definitely there are different kinds. Okay. All right. So okay. So I think yeah, I mean besides like numbers, ratios, things, I think we probably have very similar thoughts. I think fundamentally it's still, those same issues. Okay. So it's really just a matter of how to represent them. All right. So I'll share my version. Would that be all right?
Yep.
Then okay, yeah. So yeah, I'm trying to also, see how we can like combine and gauge the different concepts. I mean, they combine them. Okay, so I'll just focus on this page, okay, because this is something I actually have went over with with Aaron and Sarah the other day. Okay, just to want to get their feedback and see how they are looking at things from, potentially a participant perspective. Um, all right, so this is you can see my screen, right?
Yeah.
Okay. So the idea is that okay, so in my version, I have three types of tokens. Okay. And it's mainly correspond to the three rows. So again, right now, I mean, here I'm calling them the investor, designer, and builder. Okay, obviously, I fully agree. We might want to change them to something else. Okay, something that's understandable. Um, but essentially, what those names imply are what they're contributing. Okay, so investors are people who contribute money, right? And the designers or the founders or the management, they are people essentially contributing ideas. Okay, they are contributing ideas, networks, and the builder types, they are or I think staff and potentially maybe collaborators. They are contributing basically their time and effort. Okay, or maybe this is the staff in your term. I mean, in what you were describing. Okay, but anyway, these are the main three types I'm thinking about. And what happens is, and these are the specific number of tokens that's being issued. Okay, and I'm using, um, I'm using a $15 million raise as an example. Okay, like how this will actually work. So, for example, like what happens is these are the tokens being issued. Okay, and that's how much it's being worth on a dollar basis. Okay, so this is okay. So the investor potentially we would sell, let's say, 15,000 tokens or NFTs. That's worth 1,000 each. Okay, so that adds up to $15 million. Okay, so this is what they get in return. They get 15,000 investor tokens. Okay. And for this rows, we simply issue 15,000. Okay, I just picked the number because it correlates to this number. So my meaning that they are kind of in equal value, but I'll talk about the rights later. There's a different, and the split, this is a potential split. Okay, so that's how much within the designer token. So basically 50% belongs to JCF, which is, the platform. This is the overall. Okay, so maybe I should explain a bit the difference between the three types. Okay, so here I specifically, in this design, the power and profit are split. Okay, and by intention, meaning that, investor, they put in money, right? So they probably will expect more return financially. So the profit sharing, investor, they would have 60 and designer 30. Okay. But in terms of the decision power, that would be kind of board level voting. It's the opposite. Okay. Investor only have 30%, while designer maintain more control. Okay. 60%. And builder here, it's all 10%. Again, the ratios can be changed. It can be more, it can be less. Okay. And I think if we reduce the builder ratio to 0, that would be just almost the same as, the design you were just describing. Okay. So I think that's just a note. Okay. But reason why I like to have this is to kind of have the flexibility, because I kind of want to build a framework that's that can be generalized. So power and profit are split. Okay, they are decoupled. That's one concept. And the other thing, okay, so specifically for, let's say, designer, I identified 3 main kind of expertise we might want to include. So I guess mapping to your terminology just described, this would be the founders. Okay, and these are the management. Okay, so but I right now I'm identifying 3 main areas that would be relevant to this platform: legal, tech, the development part, and the funding part, which is the fundraising ICO part. Okay, so they are basically splitting the the other 50%. So what that implies in terms of the actual overall profit sharing and voting rights is this. Okay, so this is the overall profit and voting rights. Basically, it's twice of the profit sharing. Okay, that's what's here. And the okay, and the builder. Okay, so this is the designer part. For the builder part, it's only 13.5 millions are issued. Okay, so one difference between the builder and the other. Okay, so the builder.
Sorry, something's just happened here.
Yeah.
I got cut off from the screen share. I don't know why that is.
Okay, should I reshare them again? Let me just reshare. Yeah. See if that works. Okay.
I think somebody's tried to call me.
Okay, all right. You want to check it?
Yeah. Do you mind? Sorry, let me just see who this is.
Okay.
Just because I've been ringing somebody particularly for the last few days.
All right.
Okay. I know who that was now. Sorry.
Okay. All right. Okay.
So yeah, that phone call cut off the screen share.
I see. Can you see it now?
Yeah.
Okay. All right. So basically, that's the designer. For the builder, okay, so the builder tokens, one design is that it's fully backed by stable, by like dollar, by cash. Okay, so for example, USDT. So in that sense, you can almost treat this as a form of stable coin. Okay, they're basically cash equivalent. They can be cash anytime. And they start with $1 initially. So they can be used for any cash purpose. And basically the allocation is 3 million is for the platform, 10 million, okay, for 10 investment projects on the average 1 million each. And then 0.5 million for buffer.
What do you need a builder for the investment project?
Okay, I mean the builder tokens, they're right now just treated as a name. Okay, that basically they're being bros that are being paid by cash. Okay, so
and why are you paying if you've got a bank account with $1 million in it, or $10 million in it, right? Because that's how much money has been invested. Is that a bank account with USD in it?
Okay,
or are you saying that's
a good question? That's a good question.
Because if it's a bank account with USD in it, then there's absolutely no point in transferring that into USDT.
Okay, that's a great question.
Unless you're going to start trading it, right?
Right.
So if you don't start trading it and you're utilizing it to pay somebody in dollars, there's no point in changing it and taking exchange costs, because it's going to cost you money.
Right. That means so that actually depends on how are we getting our investment. Okay, because the typical ICO is actually raised through other cryptos such as Ethereum or USDT. Okay, so I'm actually taking your example the other way around, in that I'm actually assuming the funding we get initially, at least, it's all crypto based.
Okay, cool. Well, that's fine. So that's okay.
So right. So I'm actually assuming that we actually get, for example, USDT 50 millions of them, initially, right from the start. Okay. So actually, it's a matter to convert to fiat. Okay, if someone wants fiat. Okay. So
well, no, but I mean that in that context, if all of our funding is sat in USDT and somebody wants to be paid in fiat, then we say, fine, you can be paid in fiat, but we will pay you in USDT, which is the equivalent of $1, and you need to set up an account and give us it, and then we'll pay you the equivalent. And that's as simple as it is. And then that's up to them, and they shoulder the responsibility of changing it.
Right, exactly, yes. Basically, I think we might help them to convert, but that's kind of like an additional service. But in the design here,
I don't see the point.
Okay, all right. So, but in the design here, actually everybody is being paid by crypto. Okay, so that hence the but I mean this is the design, and here I have allocated 1.5 million. Okay, for Ian's fee. Okay, because he charges 10% for the ICO raise, right? So this is being reserved. So I guess what I'm trying to show here is that the builder tokens we can initially create is only 13.5 million maximum. Okay, because 1.5 will be paid to Ian like right after the fundraise is closed. Okay, so and one more important point is what does each token, how is it worth? Okay, what's the worth? What is it claimed against? Okay, so for builder token, it's easy because it's initially just backed by, for example, USDT stablecoin. Okay, but the idea is that with future profit generation, 10% profit will go into the builder's fund, the pool. So this dollar actually will increase value over time. It could be more than $1 per, per R token, builder token. So this is why, okay, although people are being paid by the builder tokens, and they can decide whether they want to cash it for cash immediately or to keep it. Okay, so they have the flexibility to cash or keep. Okay, so that's again part of the design. With the assumption, the longer they hold, the more value it will actually go up because there's profit sharing. Okay, is my voice still all right? Like, all right, okay. So that's one design behind. Now, for the other types of tokens, the investor and designer tokens, they actually are representing rights of claiming assets, okay, of the entire project in the ratio of the profit sharing ratio. Okay, so what this means is that, okay, so just initially, for example, right after the $50 million round is closed, okay, what we have is 13.5 million in terms of actual USDT, okay? And then, so that's the kind of the tangible assets. So all the investor and designer tokens, they can lay claims on, according to this ratio. Investor is 60%, designer is 30%. Right? And actually builders, well, there will be 10% of them. Although initially there will be no builders because all these tokens are being kept by the company. Okay. They actually are company, or project assets because, sorry, I'll use a per cap project because this is a ICO project, right? I'm talking about in terms of a ICO project. So these are the project's assets, okay, initially. But with time, these will be spent to build systems, right? Build platforms, acquire, invest into real estate projects, for example. They will become the project's assets. And obviously, we hope that the value will grow, right? So these tokens, basically, they have claims. Now, one thing they have is the voting power and the profit sharing. But should the assets be liquidated or the project dissolve, right, due to whatever reason, they actually have claim against the remaining assets according to the profit sharing ratio here. Okay, so in that sense, these tokens, they kind of act as traditional shares for companies. Does that make sense?
Yeah, sort of.
So okay.
I think the thing there's
yeah.
several different things I'm worried about. I just don't get.
Right.
I mean, first of all, we're back to the language confusion.
Right.
Then you're mixing. You're based on the idea of it being a blend of both building the platform and then investing in projects. I don't know that, if you're saying then that right off the bat we get a bunch of people and they invest in the ICO and we've got $13.5 million worth of USDT, and right off the bat somebody who's got a designer kind of categorization, they've got access to that 13.5. That doesn't sound good to me as an investor.
So basically, they don't.
And then the other thing then is
the short answer is they don't. They don't have any access to that. No.
I think the other thing is that
okay, go ahead.
Is that all of this is all very good if it's theoretical, and you can make the percentages work. But in the same way that I was saying for the example I was giving, you have to have some understanding as to what that actually means. Because all of this percentages and 15 million of what? What's the project? How's it going to work? Is it viable? Will we have anybody that wants to borrow money from TAP as a developer? Because if TAP is going to charge because how is, where's the fee? What fee are we charging? Because all of this is meaningless, because all of this is based around the 13.5 million.
Right. True.
And that's not the value of the company. That's just the value of the ICO raise.
Exactly.
And if I put in, let's say I just invest, you have one investor, right? And they've put in $15 million. Straight away, you've lost 1.5% of that to Ian, or whatever it is, 1.5 million, sorry, 15%, whatever. Straight away, you've lost that. So the value of my $1 invested has gone down by 10%. I've lost money. Why would I do that?
Okay. So, well,
as an investor,
yeah.
So we've got to answer that question.
Right?
And the way in which we answer that question is because, all right, that's the cost of finance for us, right? But what we're doing with the remaining 13.5 is we're building this super duper platform. And this super duper platform is going to answer these questions here.
Right. True.
And I think, how we're going to build it and how we're going to pay for it is relevant to the percentages that you're working out here. But again, we've got to understand there's got to be a long-term business here. And at the moment, all that we've done is we've identified some ideas on how we might split the profit. But nobody's going to invest $15 million on a project that's not going to float. We've got to show them.
Right. Yes. Well, I think you're talking about the how what the value of the platform is, right? What kind of value is it generating, and how much is it worth? I think you're talking about the value of the platform. That's the part this doesn't discuss. Okay, this is about what the ICO raise and I guess the allocation of it.
But I think that's the important thing, though, is like you and I have come up with some ideas on how to do that, but fundamentally, we still need to answer that question because it's kind of academic to go any deeper. I mean, look, we've both got, like you said, we've both got similar ideas, but they're not the same. And there's kind of a broad, broadly speaking, there's a direction in which we both think it should go in, but it's not the same. Okay. And there's some variation. There's going to be a little bit of give and take, right? Fine. But we still need to answer the question, why would somebody invest $15 million? And we haven't done that yet.
I see. Right. So agree. So the obvious. Okay, so I guess that's about what the features, right? What the value, what the service of the TAP platform will offer, right?
Yeah.
Right.
Yeah.
Okay. Yeah, but I just like to come back to the game part compared to where we started. I think this is also relevant in terms of.
Sorry, did you say game or gain?
The gain, right? The progress. Okay.
There's no gap here, Julian.
Yeah.
There's no gap in this.
Okay.
I'm not criticizing anything. I'm just saying what we have to do is answer the question about what the value is for the investor. Otherwise, the investor is not going to invest, and therefore this is academic.
Right. Agree.
This is an exercise in how to split something into pieces.
Right. Exactly.
It's not a business.
Yes. Right. I agree. So yeah, but this is, I guess, this is the tokenomics part, right? This is the issuing of the tokens, right?
It is,
right.
But I still think that it's kind of like the detail of the tokenomics, right, is only really valuable if we've got a product and a service and a value that we can quantify.
Right. True.
Because why are people not interested in tokens and crypto? Because it's volatile. Why is it volatile? Because it's not actually providing a service other than Bitcoin and Ethereum and stable coins. And the stable coin is just a means of transferring money internationally.
right.
Bitcoin is a tradable piece of finance, and
Right, right.
Ethereum provides smart contracts.
Yes, yes, utility. Right, right,
Right. So
right.
other than that, everything else is all smoke and mirrors.
Okay, okay, right. So
So
basically, I think, right. Okay.
sorry, somebody's trying to contact me. Let me just
Okay,
check.
all right.
Um,
So all right. So yeah, Max. So thanks. All right. So that let me suggest, okay, maybe that's the next piece we want to work out. Okay, right? Because I
yeah,
think today's
definitely.
discussion is good in a sense. We have I guess a rough idea about how we want to design, how we want to allocate, share, the race itself, right? In terms
Yeah,
of what are the components, what are the rules of people that will participate. I think although the language, we use different language, but I think I can definitely see the fundamental concepts are similar. Okay.
yeah,
Concepts are similar,
yeah,
yeah. And then it's a matter of allocation. But
yeah,
I fully agree. I think the next piece is what services, what features are we providing for the different
yeah,
roles you mentioned identify, right? In terms of the
yeah,
investors, the landlords, right? Well, the landlords and developers. And what's the benefit to them? What's the value for them?
yeah,
And yeah, all right. So maybe let's do that. Okay, as our next. And I suggest we also come up with the versions and we can have a discussion and try to merge them. Would that be all right? And
Mm.
sounds like that's something you want to nail down first, because I think we still have details on the tokenomics part,
yeah.
right? We want to
But I
merge
think
our,
because
right,
for me, it's like the details of the tokenomics aren't really going to make any difference. Broadly speaking, we've got a way of structuring it, right?
right, right,
But the
right, right.
details fundamentally will matter once we can show we've got a business model that they'll work on.
Okay, right, right. Okay, all right.
Because then if we know what the business model is, and we know that we're going to project to buy, we're going to raise this much money to do this, and then this much money to do this, and then we can figure out, well, actually, this is going to be worth this much. Then we'll know how to do the splitting of the percentages.
I see. And also that will have a more solid basis to
Yeah,
judge whether it makes sense
exactly,
to give this
exactly.
much, let's say, for example, for the legals, for the
Yeah, is
platform
it worth
developers.
5,000
Right,
tokens to do this, or is it worth 20,000
right,
tokens to do
right.
the same thing?
Because,
I
yeah,
don't know,
okay,
because we
right.
don't know the value,
Okay, right.
right?
Because
So it's all about,
potentially, yeah, I see your point. Because let's say if the legality part is the big area that's going to produce value, we might want to allocate a bigger chunk, right? For
because
the legal part, right?
at the moment
Okay,
we're talking about splitting a percentage of
right.
nothing.
All right, right. Okay,
So I don't care if I've got 100% of nothing or 1% of nothing. It makes no difference.
okay,
It's still
okay,
nothing,
okay,
right?
okay. I see.
So until we kind of figure out what we're playing with here,
Okay, sure.
raising and the idea of, well, we've got an ICO and it will raise 15 million.
Right, right.
For
Okay.
what?
All
The
right,
whole
okay.
point about the
All
ICO
right.
will raise 15 million because we've got this fantastic goose that lays golden eggs.
Right, right. Okay.
And because of
So,
that,
right, right.
people will want to have a
Okay.
part of it.
All right. So I think maybe we can do some specific examples. Let's say for Henry, for the Who family, right? That's the
Yes,
right, and
that's what I
let's say
suggested earlier.
even right, and let's say for the architect, I guess. Well, so for the landlord developer, right, and also for investors. For the investor, that would be, for example, Chris, right? What does it mean for Chris? He's a he's a real estate
Well, no,
investor,
but I mean,
right?
yeah, no, that's true. But I think the thing is, if we sit there and we go through, right, does it make sense on each component part?
Mhm.
And so, like, does it make sense for the Who family with the Who
Right,
project?
right, right, right. Okay, right.
Because at the moment, yeah, or if that, you see, if that project isn't going to float because it's got no value in it,
Mhm.
Well, Henry's already come back and said, well, it needs to be, you know, what, 5 times bigger or whatever it is for it to make any value for him.
Right. That's right. Yeah. Okay. All right. Good. So yeah, let's do that for our next discussion. Okay. And Thursday, I think Thursday. Wow. Okay. This Thursday, I think the
I'm pretty chopped Thursday, actually.
Thursday. All right. Okay. So, well, if not Thursday, then that will be next Monday then.
Can we do that?
Yeah, sure. Yeah. I think we can exchange notes in the process, okay, during this period.
Yeah.
But yeah, okay. But this will be okay. So let's go back to the regular time. Okay, that would be 9 for you, right?
Oh, really? Not 11?
Oh, sorry. 9, right? Today is 11, right?
No, today's 1 o'clock in the
Oh,
afternoon.
today's 1. Oh, sorry. Then 11. Okay. Sorry, it's late for me.
That's okay.
That would be 11 for you. Yeah, 11 for you. True.
Okay,
Yeah.
11
Okay.
o'clock. All right.
Yeah.
So see you on
Okay.
Monday at 11.
Yes. All right.
All
Okay.
right.
All right. Take
Have some
care.
rest.
All right.
Enjoy
Have a
yourself.
yeah,
All right.
fantastic week. All right. Take care. Bye bye.
Bye-bye. Bye-bye. Bye.